What's up, guys? Welcome back to the channel, or welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in that brokerage account. They're going to give you 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Click on that Webull link. Open up your new Webull brokerage account. Go get that free stock. Go get that free money. I'm going to also send you a Webull tutorial video to walk you through how to use the Webull app to make your first trade. Send me a DM on Instagram at RichardFane28, and I'm going to send you that free Webull tutorial video to walk you through how to start building wealth. I got this question quite a bit the last couple of days. Richard, why aren't you buying real estate anymore? Why isn't real estate for income a part of your investment portfolio anymore? And I thought I'd address that question since I get it so often. You guys know I've invested in residential real estate for income for over 25 years. I started investing in real estate when I was 26 years old. I bought a single family home, 3-bedroom, 2-bath. I paid about 68 grand for it. But that little single family home started my real estate investing portfolio. And I bought a lot of properties over the last 25 years. But I started selling those properties around 2014. And the reason I started selling them in 2014 was because that was always the plan. My goal with real estate was one purpose: increase my net worth through capital appreciation in the properties that I purchased. That is the way I increased my net worth to 7 figures, is by buying real estate for income, good neighborhoods where people had a desire to live, and I just held those properties, put tenants in them, took care of the tenants, collected my rent, and just watched those properties appreciate in value every single year. And the goal was, when it was time to start selling those properties, taking the equity and rolling that equity into the stock market and into other investments. And that's what I did. I actually sold my last rental property in 2021. Now, I currently own 2 residential properties. Neither one of them are rented. They're my primary and secondary home right now. And that's the way I want it. And it'll probably stay that way until interest rates for 30-year fixed rate mortgages come down. Right now, interest rates are in that 6 to 7% range. That's too expensive for me, because see, I'm the type of real estate investor, I like to leverage, 5-to-1 leverage to be specific. So I go and borrow 80% of the purchase price for a rental property from the bank. I normally put in about 20% of my own money. But with money being so expensive to borrow now, it doesn't make sense to buy real estate. It doesn't cash flow. It doesn't give me the cash on cash return I need in order to justify the investment, especially when I can just simply put the money in the stock market and get a better return on it, and I don't have to worry about tenants and toilets. That's the main reason right now I'm not investing in real estate. Will I invest in real estate again? Yes, sometime in the future. But it has to make sense from a financial standpoint. I gotta be able to make money. The rental income has to be able to cover the expenses and put some money in my pocket so that I can build up reserves for my properties. I don't want to be coming out of my pocket paying for things that break on the house. I don't want to do that. I don't want to have to come out of my pocket to pay property taxes or property insurance. All of that should come from the rental income. But with interest rates being so high, most of my rental income is going to go to pay interest to the bank, who's lending me the 80% to buy that property. So at this point, it's just not a good financial decision. It's better for me to be able to take my cash, put it in paper assets, and put it in my business. Those are the two asset classes right now that I'm putting my money in because they're going to give me the biggest return with the least amount of time and the least amount of money out of my pocket, right? And when I say money out of my pocket, I'm just simply talking about the interest I got to pay the bank. There's no way around it. You're going to pay 6 or 7%. Now, 18 months ago, it was 3.5%. So it's more than doubled in the last 18 months. And that's because of the Federal Reserve increasing short-term interest rates. Now, short-term interest rates do indirectly affect long-term interest rates, especially mortgage rates, because the mortgage rates are tied to the 10-year Treasury. But the 10-year Treasury is affected by when the Fed moves short-term interest rates up and down. So until the Fed start moving down the Fed funds rate, aka short-term interest rates, then the 30-year fixed rate mortgage rate is not going to come down. So I'd rather take my money right now and I'd rather put it in the stock market, buying ETFs that track the S&P 500 and the total stock market. Also, I'm putting my money in ETFs that are sector specific. I like the tech sector. So I also put money into a tech ETF. I just sold one of my investments, Vanguard Information Technology, VGT, recently, and made a good amount of money, man, just by leaving that money in VGT over the last 18 months. I made about 85 grand for just letting the money sit there. So it's hard to turn away from that type of return to go and chase down real estate properties that are overpriced, number one, and you're gonna pay twice from an interest rate standpoint than I would have paid 18 months, 2 years ago. So for me, it's just not the right financial move. I'm gonna stay invested in paper assets, and I'm gonna continue to put money into my business to continue to grow that. The question is for you, where are you putting your money? Are you putting it in paper assets? Are you putting it in real estate? Are you putting it in a business? Or are you just buying stuff to make other people wealthy? I don't know. You got to answer that question. Right now, I keep telling you guys, is a perfect time to build wealth because the stock market is still on sale. Yes, we've had a nice little run in 2023. The S&P 500 is up about 15%. Nice little run. But it's still not where it was back in December of 2021. So it's still some opportunity. And I think going forward, there's a great opportunity that the S&P 500 is going to go past 5,000 points. It won't happen this year, but it will happen, in my opinion, in 2024. It could go to 5,500 points. It could go to 6,000 points by the end of 2025. Just think right now, if you were invested through dollar cost averaging and you just had some patience for a couple of years, potentially you really could multiply your money if you were invested in an ETF that tracks the S&P 500. That's probably the only investment you really need when it comes to paper assets. You don't really have to buy individual stocks. The S&P 500 has the top 500 companies in America in the fund. Why would you need anything more than that, really? Now, if you do want to buy some individual stocks, then I would say stick to big boy blue chip companies, especially in the tech space. For me personally, I like Apple, I like Tesla, I like Meta, and I like NVIDIA. Those are my 4 tech companies that I buy when I'm buying individual stocks. I also like a couple of financial services companies like Bank of America and Wells Fargo. Listen, man, anytime interest rates are as high as they are, banks are making a lot of money. Why? Because they can charge more interest. So where do banks get money to be able to lend to customers? Well, they get deposits from customers. People like you and I, we go in and put our money into these banks, and they can take our money and lend that money out to other customers and make a bunch of profit through interest. Now, they're not going to pay us very much interest, but they're going to charge us a lot of interest if we want to borrow money in the form of a loan. So banks are a good place to put money, at least in my opinion. And when I want to invest in a financial services company, those are the two banks that I invest in. Plus, they pay a really good dividend while I hold my money in their stock. If you want them 12 free stocks from Webull, guys, I need you to click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.